Thank you for standing by, and welcome to the APN Property Group Limited Half Year 2019 Results Conference Call. All participants are in a listen-only mode. There will be a presentation followed by a question and answer session. If you wish to ask a question, you will need to press the star key followed by the number 1 on your telephone keypad. I would now like to hand the conference over to Mr. Tim Slattery, Chief Executive Officer. Please go ahead.
Thanks. Good morning, everyone, and thanks for dialing into APN Property Group's results presentation for the first half of financial year 2019. I'm joined by Mr. Michael Growth, our Chief Financial Officer. Moving straight to slide 3, APN delivered a strong result for the first half with operating earnings after tax of $4.8 million and statutory profit, which includes unrealised gains on the group's co-investments of $6 million. Our operating earnings per share for the half were 1.55 cents. This figure is 7% lower than the prior corresponding period, which reflects the impact of a 96% increase of our cash holdings to $29.3 million to position the company for further growth opportunities. We're also reaffirming our expectation of delivering full-year earnings of between 2.4 and 2.9 cents per share and confirming dividend guidance for the year of 2.25 cents per share fully franked. Our funds under management at December 2018 was steady over the year, reflecting gains in our direct property funds, offset by unrealised mark-to-market movement in the value of our listed property securities funds. However, I'm pleased to report that the majority of this movement has reversed since balance date. On slide 4, we've outlined the underlying quality in the results. APN generated 98% of its operating earnings from recurring sources, including 7% growth in our funds management fee revenue over the prior corresponding period. With a robust balance sheet, we believe we have significant flexibility moving forward. Moving on to slide 5 and the group's operational achievements for the period, we've continued to deliver strong income-focused investment returns across the business. Particularly pleasing was the accelerating growth in our Asian real estate securities fund, which has grown by 63% over the past 12 months, secured additional research ratings and platform representation. We have seen very strong ongoing leasing results delivered by the APN Industrial REIT team and continued acquisition and valuation growth for Convenience Retail REIT. Collectively, our two listed funds have delivered fund growth for the period of $48 million since June. We've also successfully completed our latest syndicate, the $24 million APN Nowra Property Fund, and post-balance date we have launched an equity raising to extend the $54 million APN Regional Property Fund. Turning to slide 6, as many of you know, we would look at our long-term performance as well as our short-term performance, and here you can see we have now delivered consistent growth in recurring income and funds under management over in excess of 5 years, supported a growth in our annual dividend of over 80% over this period. We've delivered this growth without excessive leverage or the acquisition of goodwill through M&A, and we continue to believe that the business has excellent organic growth prospects from this point. Turning to slide 7, you can see that APN now has a commercial real estate platform with significant scale with over $1.2 billion of assets across Australia. Our portfolio offers an excellent set of investment metrics in our view, with a weighted average lease expiry of in excess of 8 years and an occupancy level of 98%. We continue to believe the carrying values of our portfolio offer investors potential upside. As an example, our office and industrial portfolio is carried at a cap rate of 6.5%, and our convenience retail portfolio is at 7% in our two listed funds. I'll now pass over to Mr. Growth for our income statement on slide 8.
Thanks, Tim. So turning our attention to the income statement, operating earnings for the period were 1.55 cents per share, marginally down on the comparative period result of 1.67 cents. This solid result is underpinned by APN's focus on quality recurring income, which I'm pleased to report continued to grow. Of note was the growth in the recurring revenue from funds management activities, up 7% to $7.6 million for the half, benefiting from a higher average funds under management balance together with a favourable shift in the mix of FUM to higher margin products in our listed and unlisted direct property funds. This revenue growth emphasised the benefits of APN's diversified property management platform, covering the business lines of real estate securities, listed and unlisted funds, and provides a strong base to leverage future profitability and margin as scale is added to the platform. Operating costs decreased $300,000 to $6.5 million, primarily the result of lower total employment costs. Our resourcing remains prudent, balancing the requirements of the existing operations while continuing our commitment to invest in our capability to pursue sustainable growth opportunities that will benefit investors. The group's average corporate tax rate normalised to approximately 28% in the current period, reflecting a reduction in the tax rate applicable to the group to 27.5%. The prior period result was lower than normal after the recognition of a one-off benefit for the previously unrecognised tax losses. Turning our attention now to slide 9 and APN's balance sheet. Net assets grew 3% for the period to $123 million. Net tangible assets totaled 38.6 cents per share versus our current trading price of approximately 44 cents per share. We deliberately sought to further strengthen the financial position and therefore flexibility of the group in the current period. In particular, this half saw the successful syndication, as Tim discussed earlier, of the Nowra Property Fund into a new fund managed by APN. This asset, together with its associated limited recourse borrowings, was previously held on APN's balance sheet. While still retaining a small co-investment stake in this syndicate, it has helped to contribute the additional $14.3 million of cash available to the group at the end of the half, bringing the total available for emerging opportunities to $29.3 million. In the current environment, this is an enabler for the business. It'll facilitate APN sourcing quality, risk-adjusted, new and existing fund opportunities for its investors, leverage our core skill sets and therefore scale benefits of our property management platform, and deliver increased margins and profitability for our shareholders. I'll pass back to Tim.
So turn to slide 10. Our real estate securities business continues to be one of the best supported in Australia, despite reporting a small decline in funds under management over the period to $1.59 billion. We saw slower net flows for the half, which we attribute to negative investor sentiment towards property over the 6 months, including residential property by association, as well as expectations of interest rate rises. These factors have receded to a certain extent post-balance date, and we have seen over $50 million of the $60 million negative market movement in the chart at the top right reverse between 31 December and today. The APN REIT fund remains a fund of choice for a large number of investors looking for consistent income yields and a fund with a long-term track record. On slide 11, we've highlighted the current positioning and the future potential we see in our Asian Real Estate Securities Fund. We're pleased to report the fund has increased by 63% over the 12 months to December, with continuing strong income and capital growth performance. Among the reasons we believe in the growth potential of the fund are the underlying quality of the property assets, highlighted by one of the portfolio holdings on the top right, owned by Mapletree, which is a shopping centre in Singapore, as well as on the following page you can see the fundamental drivers. So Asia offers unparalleled growth over the long term in our view, with excellent demographic trends and a wide and diverse investment universe, which is nearly 3 times the size of the Australian listed property market. With well-governed REIT regimes across our 3 principal markets of Singapore, Hong Kong and Japan, the APN Asian REIT Fund is a logical extension of APN's securities investment capabilities and is consistent with our strategy of building APN's scale and profitability. Turn to slide 3, you can see that we have taken the step to align our 2 listed REITs branding to that of APN's. We've done this to simplify and maximise the leverage of the APN brand in the market between agents, tenants, advisors and investors. APN Industrial REIT continues to go from strength to strength, with occupancy increasing to 96% over the period on the back of some excellent leasing results. These results are continuing to drive earnings and distribution growth, as you can see on the slide. Similarly to Convenience Retail REIT, both of our listed funds are well capitalised, with gearing toward the lower end of the target ranges, providing acquisition capacity. On slide 14, Convenience Retail REIT is continuing to beat its IPO forecast and has delivered over 8% growth in its NTA since listing. The portfolio offers investors a weighted average lease expiry in excess of 12 years at a cap rate of 7% with 100% occupancy to a high-quality portfolio of national and international tenants. We're very pleased with the fund's operating performance and its future prospects from this point. On slide 15, our direct property division has expanded over the period with the addition of a fifth fund, the APN property fund successfully closed, which reflects ongoing demand from investors for unlisted commercial real estate funds. Our team has made excellent progress with our Stellar Development Fund, with all initial capital already returned to investors, and the fund making excellent progress towards its target IRR of 18% per annum. We have also launched an equity raising transaction since balance date for the APN Regional Property Fund, which we have summarised on slide 17, which we'll now skip to. The APN Regional Property Fund owns 2 A-grade office buildings in Newcastle and has an exceptional occupancy track record, on average over 99% over 10 years. We believe the properties offer investors competitive net rents at approximately $390 per square metre and represent attractive buying at an independent valuation of $51.75 million. This equates to approximately $5,500 per square metre of net lettable area. That's on a fundamental metric, which is roughly 1/3 of the current value of comparable properties in Sydney CBD. The fund has a forecast yield of 7% based on initial gearing of 33%, as outlined in the product disclosure statement. We believe the product is well positioned in the current market environment, and we are currently in the process of that equity raising transaction. I'll now pass back to slide 19 and Michael for our stapling proposal update.
So just briefly on the stapling proposal. So sound progress has been made with both shareholder approval and in principle approval from ASIC for the establishment of a new AFSL licence. Discussions with the ATO are continuing for the class ruling necessary to provide tax certainty for investors. We expect completion will occur by 30 June 2019, and we'll keep the market updated with progress. Thanks, Tim.
So moving to slide 21, in terms of a couple of comments on key industry developments, I'd like to touch first on the Hayne Royal Commission report. Having reviewed that report, we believe that as an independent specialist investment manager, which has made significant investments in our compliance and risk management, personnel, processes and culture, we believe we're well positioned. We do expect a period of enhanced regulatory oversight for the industry as a whole, and we also expect certain investor channels to be impacted by some of the findings. The other key potential change is the Australian Labor Party's policy on the taxation of franking credits, which, if implemented in our view, has the potential to significantly increase the attractiveness of commercial property trusts, including APN's range of investment products, for low-income tax bracket taxpayers such as retirees. On slide 22, on our overall view of the market is essentially that APN's property for income value proposition remains relevant and in demand to a wide range of investors, both retail and institutional. Our direct property investments are heavily skewed toward industrial office and long lease term convenience retail, and we believe the property sector continues to offer attractive value in selected areas, while still providing an excellent income profile to investors looking for yield. This is particularly the case, as you can see in the charts at the bottom of the page, with the recent softening of interest rate rise expectations. On slide 23, in summary, we believe APN is very well placed. We have an excellent established platform, good governance and strong investment performance. We have a flexible balance sheet with good growth capacity, and we have excellent alignment between our shareholders, our fund investors and our board and management team, with in excess of $100 million of APN's money invested in our funds. While we believe the previous years have delivered strong returns for shareholders, as we've illustrated on the page, we continue to believe that the company has significant further growth potential ahead, and we're confident in our ability to continue to grow the value of the business for all shareholders. Thank you again for your time, and we're now happy to take any questions you may have. Thanks, Jennifer.
Thank you. If you wish to ask a question, please press star 1 on your telephone and wait for your name to be announced. If you wish to cancel your request, please press star 2. If you are on a speakerphone, please pick up the handset to ask your question. Once again, if you wish to ask a question, please press star 1 on your telephone and wait for your name to be announced. There are no further questions at this time. I'll now hand back to Mr. Slattery for closing remarks.
Thanks again, everyone, for dialing in. Should you wish to contact us, please feel free to contact Michael or myself. Our contact details are in the presentation. And thanks again for dialing in.